Hello, this is Jeb Hamburger from goldstocktrades.com, and this is the week ending August 16th, 2013. Some very important technical updates that I wanted to discuss with you regarding some of the key commodities and precious metals that we follow. Let's first look at gold. We saw back in 2011 extremely overbought conditions on the RSI. We had a parabolic rise. I suggested a hold. We've been in a consolidation phase. This may have been in 2013, the April, May, June period, the capitulation phase of this correction of close to 2 years now. We've reached an extremely oversold position on the RSI recently in June, and that's when I said, and I posted articles about the record oversold position, the record short position. And in fact, the smart money was buying at that time in late June when people were calling the end to precious metals. Now we see a major powerful bounce off those 3-year lows. We've had a breakout above the recent downtrend, the capitulation downtrend in the 50-day moving average, which is very bullish. We closed up at 1375.50. Very close to the high of the week, which is 1379.10. We broke through the key 50-day moving average at 1304, and we think the next stop will be the 200-day moving average and the 2011 breakout at 1550. After we get through there, the next step we may approach the 1800 area before we see some consolidation, and then we should gain for an eventual breakout at the 2011 highs of 1900. But we have a bullish MACD reversal on the weekly chart, so this is the potential to start a new leg like we saw in 2010. The recent gains in precious metals heading into the September Fed meeting may be indicating that the taper policy may not happen as quick as people believe, or that the taper policy, if it does happen, could set up an inflationary spark and rise in interest rates. This inflationary fears is causing some bullishness, bullish attention to precious metals and to the miners, and it's coming off an extremely oversold level, so we could see a powerful bounce. And the next target will be the 200-day moving average at 1511.23 and the 2011 breakout at 1550, which acted as support throughout 2012 and early 2013. So we may see a bounce up to those levels. Let's take a look at silver, which I'm extremely bullish on. I think that silver could see some rapid gains like we saw in 2010 up to 2011 before we saw those weekend margin rate hikes and the shorts come into the silver to knock it down. But back in 2011 we again reached a very overbought parabolic condition in silver in record volume. This was a time to be cautious. Now we've reached the exact opposite, oversold on the weekly chart. So this is why at 3-year lows I was expecting that we're going to see some major support come in. We have. Silver had a massive week last week, up 13%, over 13%, closing at 23.18, close to the high at 23.40, breaking through the 50-day moving average, $20.33. The next stop, we're going to probably see it try to move quickly up to the 200-day moving average and break that downtrend, consolidation trend that's been occurring since April of 2011. And silver could move very quickly. We see a bullish MACD reversal here on the weekly chart, and we think that this correction to 3-year lows could be the turning point in the bottom in the silver market. So stay very close to silver. We expect the silver to gold ratio that silver is going to grow even go up higher than gold on the upside and outperform. And we think that this is a very interesting development. This bouncing off the 3-year lows on very strong volume. This may be indicating that the shorts are covering, and that we could begin to see some new buying at these levels and a possible new uptrend like we saw in 2010 when silver doubled quickly from $20 to go way past $40 to almost close at above 47.50. So keep a close eye on the silver market. Moving on to copper, we're seeing that copper is bouncing off of 2011 lows at $3. And we're seeing, similar to gold and silver, an oversold reading on the RSI compared to the overbought we saw in 2011 and early 2011 and late 2010. So this may be indicating that copper is bottoming out. We're seeing increasing momentum. We've gotten just a confirmation of a bullish MACD reversal in the last 2 weeks, and we're closely following to see copper if it can break the 200-day at 341, and then we're looking to see this downtrend broken around 365, 370, and from there we could definitely go into an uptrend and break through those old-time highs at 2011 at 450. So keep a close eye on copper, especially if we begin seeing some inflation, concerns of inflation increasing. So copper 200-day moving average at 341, and then a break of the downtrend at 365 must be closely followed. We're also keeping a close eye on oil. We're seeing concerns, geopolitical concerns increasing in the Middle East with Egypt, the military, and the Muslim Brotherhood fighting. We're seeing a situation in Syria and Iran, the turmoil increasing. Oil looks like it could break out higher here at $110. A breakout here at 110 we could see a major increase of interest in the energy sector, and we could see a move of oil to the 150 area, especially if we see any concerns with the Suez Canal in Egypt being shut down, or withdrawal of military aid from the United States to Egypt, which would mean the closure of the Suez Canal. And also, do not forget the Strait of Hormuz with Iran and Saudi Arabia. There's a threat of that situation increasing as well. So oil could possibly break out here at 110 and cause a very explosive move to the 150 area. This could also spark, again, inflationary concerns. We're beginning to see a rotation from the bond market and the dollar into these sectors like precious metals and oil and copper. So this is signaling to me, the charts are signaling that we may be on the verge. Investors may be predicting that we're on the verge of a reversal here, and the deflationary trends that we've seen with the bonds rising and the dollar rising may in fact be reversed here, and we may see more capital looking to hedge against hyperinflation, investing in precious metals and energy. And now let's move on to the U.S. dollar. For several weeks, I've been concerned about the dollar and sell-offs every time that it's broken into new highs. This indicates to me that money is moving out of the U.S. dollar. There's no sustainable breaks here into new highs. Each time the dollar this year has broken into new highs, it's met with very strong selling, We're seeing declining momentum since 2012, 2013. This may be indicating that the dollar is topping, that precious metals are bottoming here and reversing higher. Gold, silver, copper, oil, and that the sectors that we've been following, the mining sectors, may in fact be at a bottom here and maybe reversing higher. So stay tuned to goldstocktrades.com, and thank you so much for listening to today's update, crucial update on the charts showing a potential topping in the US dollar and basing and reversal in precious metals and copper, a potential breakout in oil, and hopefully we'll see some of the mining stocks beginning to make some powerful moves to the upside. Have a great week.